paying attention to what's been going on in the world, I don't know where you've been living. You've probably been living under a rock. But that's besides the point. To be honest, the world right now is still very, very fresh, and it's still very, very on the brink of collapse, some would say. And to be honest, it doesn't seem to be getting too much better, despite them reopening many, many different places. And to be honest, on this channel where we focus on finance, our biggest concern is the financial markets of the United States. Now, of course, the financial markets of the United States mainly affect the Western world. And to be honest, Robert Kiyosaki has actually given us some pretty good advice when it does come to what's actually going to happen. Now, to be honest, as you guys all know, advice isn't exactly solid advice because it's not concrete. As you all know, no one can accurately predict what is going to happen. We can only try and give our best estimates and hope for the best. But this is something that Robert Kiyosaki is actually pretty good at doing. If you don't know who he is, he's the author of Rich Dad Poor Dad. And in today's video, I'll be explaining to you what he said and how you should prepare for the depression or the next recession. So, Robert Kiyosaki is a motivational speaker and a financial advisor who talks about market crashes, passive incomes, online earnings, and his game cash flow is well known. In some of his recent videos, he's basically going into detail on how the next depression is going to come about. To be honest, I would say this is actually pretty scary because right now a lot of people think that the corona is over. You're hearing a lot of people say that everywhere's open, many countries have opened, and nothing bad has happened. However, to be honest, there's a lot of manipulation going on in the markets with the Federal Reserve, and there's a lot of things going on across the entire financial markets that haven't ever happened before. So right now, we are actually treading into uncertain times, meaning that the future is highly unpredictable. So, what has Robert Kiyosaki said in order for you to prepare for the wealth? So, what does Robert Kiyosaki actually want you to do in order to prepare if there is a major depression or a major economic collapse? To be honest, the very fact that you're watching this video is a good sign because this means you're someone who's proactive and not reactive. If you're proactive, you can seek out the problems before they occur and stop them. That way, you won't have to deal with them. If you're reactive, you're going to wait until the economic crash happens, and then you're going to be left wondering, how am I going to afford my mortgage? What you need to do now is you need to pay current attention to the markets, what the Federal Reserve is doing, and exactly how the stock market is moving. The reason why you want to do this is because if you don't pay attention, you're never going to realize when the economic collapse does happen, if it does. And you need to be one step ahead above everybody else because we live in a very competitive world. And if you aren't, you will fall behind. So, what can you do to prepare for the next economic crash / depression? The first thing you need to do is you need to lower the amount of debt that you have. If you have existing credit card debt, existing monthly payments, you need to get those down as much as possible. The reason you need to do this is that in the event of an economic crash or another economic collapse, what you need to be able to do is you need to be able to survive and provide for your family. And in order to do this, you need to make sure that your cash flow is secure. What cash flow means is this means the money coming in every single month. So for example, if I'm making $3,000 a month, my expenses are $1,000 a month, my cash flow is of course going to be positive $2,000 a month. Now of course, this isn't most people's scenario. Most people do live paycheck to paycheck, and that's completely understandable. If you are in that situation now, I'd recommend getting out of debt. The reason you want to get out of debt is because look at it this way. If we do reach another economic collapse, what's going to happen? You're probably going to lose your job. There's going to be lots of unemployment. And what happens when there's lots of unemployment? You're not going to be making any money. And if you're not making any money, you're still going to have your monthly payments. You're still going to have your rent, your phone bill, your Netflix account, and so forth. So what you need to do is you need to reduce your current debt. The reason you need to do this now is because the earlier you do it, the earlier you can start using the excess cash and putting it into income producing assets. So for example, let's say right now I have a poor cash flow and I'm only really saving about $200 or $300 a month. What I would do with that money is firstly, I would make sure that the money that I have is built up to a point where I can last at least 6 months of expenses without a job. Ideally, you want 6 to 12 months because this gives you some security in the event that you do lose your job in the next economic collapse. This just makes sure that you're going to have a roof over your head, you're not going to go homeless, and this is going to give you a lot of time to build a new income stream or to find a new job. Ideally, you want to get minimum 6 month expenses saved. So once you do have 6 months expenses saved, what's your next step to do with the excess cash you have? So if I was earning a low income, what I would do is try to look at my lowest subscription and turn it into a income producing asset. Now, this may not seem like much in the beginning, but over time, interest and investing, it actually compounds a lot. So I would look at, for example, my phone bill or my Netflix account. Do I really need to pay $20 a month for Netflix, or can I put $20 a month into an income producing asset? So for example, I would take the $20 a month I'm putting into useless stuff and then put those into an income producing asset like a high yield dividend stock. If you want to learn about dividend investing, you can watch our video on the 6 ways you can retire young through dividend investing. Essentially what you're doing is you're building up a very small form of security. Dividends actually pay quite well, and it's actually really good in the event of an economic collapse. Because if you have a form of passive income, that means you're not working for your money and you're going to be able to have a decent income stream. Now, before you start investing your money into random dividends, I would suggest in making sure that your investment portfolio is very diversified. You don't want your entire portfolio to be built on the back of one company, because as we know, companies come and companies go. And to be honest, right now, a lot more companies are going than they're coming. So I would make sure that your investment portfolio, if it's in the dividends, make sure it's definitely diversified. That way, your income stream is going to be protected and you're not going to lose a large chunk of your monthly income. I would also suggest diversifying your income to other things. For example, recently gold has actually been going up quite well in value. And we need to look at the reason for this. You see, a lot of the markets aren't actually determined by graphs. It's mainly determined by human emotion. And the reason I say this is because if we look at the many graphs, it's mainly determined by greed and fear. And if you know how these emotions work, you can somehow actually predict what's going to happen in the market. And to be honest, when there is an economic collapse, what tends to happen is that people tend to look at the US dollar as if it's not worth much value. And what happens when the US dollar goes down in value is that the precious metals tend to rise. So I would suggest getting a very diversified investment portfolio that consists of dividends, gold, and additionally, even if you don't think this is right, I would also recommend a small amount of Bitcoin, because as you all know, Bitcoin has definitely been improving in its price, and every time the US dollar seems to take a hit, Bitcoin definitely seems to go in the opposite direction. So I would say what you're doing is betting against the future fail of the US economy. And I would say you don't want to be the guy standing around asking, what should I do now? You want to be the person who watched this video, took some action, and protected your family. You don't need to be making an extra $1,000 a month from your investments. A little $200 a month can go a long way in order to stay above the water in bad economic times. So I'd recommend looking up those things which you can find on our channel and staying above financial trouble.